Hi all, in this second part of our video series, the math of winning at day trading, we want to discuss the math of day trading as much as it is feasible to be discussed in 15 minutes. I'm also attaching the description what ChatGPT has to say about it, and we'll ignore, of course, long-term investing. And now you can see on this chart how the chart of Coca-Cola looks over the last 5 years. It could have been different, of course, and we can look at the chart of Nvidia over the last 5 years. That's the chart of Nvidia over the last 5 years. What's there to say? I mean, the chart says it all, and those big moves down from 1255 to 125 is a split. So instead of owning one share worth 1255, investors are getting 10 shares worth $125 each, which is exactly the same. It just creates more liquidity, which is fine. Again, we're not gonna bring in long-term investing, which can bring a stock up 10,000%. In the case of Apple, I think since its IPO, it's up like 14 or 15,000%. I don't remember the number, but this is not the purpose. We want to talk about day trading. So being that we're going to talk about day trading, let's move to the 3-minute chart. This is the 3-minute chart of Nvidia. I'm not going to elaborate on Nvidia. I have so many stocks here that I don't necessarily want to go to the most famous one. Let's go to a random one, ASNA. That's ASNA. You know what? It has a clear downtrend, so you may think I have a bias. Red Robin, okay. Also downtrend. $3. Okay, let's take a look. Perfect. $3. One day it's down, the second day it's up. Liquidity is very good. It's a $90 stock. You can trade it long and short, no problem. So let's think in terms of a day trader. What do you want to capture? And let's say you're entering a position in $3 at a round number, doesn't matter which, because the position is going to be a round number position. For the purpose of this example, let's take $10,000. That's going to be the position, roughly 100 shares, maybe 110 shares, but we're going to deal with money. Okay, so we're going to buy positions in DLTR. We're going to assume zero slippage and zero commissions, okay, which is obviously not happening, but we want to make things clearer for everybody and understand how a day trader would operate. So a normal day trader would look at $3, ask himself, why would I trade $3 versus 6,000 other stocks? Well, if you are sitting in front of the roulette table, you're there. You're in the game. So here we are in front of my screen, and out of 6,000 shares, I decided at random this time to focus on DLTR, which is obviously not a normal decision, because on a given day I have maybe plenty of other options, but let's ignore. I'm going to day trade DLTR. Okay, so that's my mission, to day trade the DLTR. Now I want to help my odds, and I want to assume trading with the trend of the LTR during that particular trading day. And if I'm looking at the day of June 11, okay, which was yesterday, I see a gap up. Then I see, let me point it to you guys. I see this gap up in the morning session. Then I see a big bar up, a pullback, another leg up. You can see the leg up here. I move sideways, a leg down, then a leg up, and finally at the close, a leg down. So plenty of trend changes in this 6.5 hour game in $3. Okay, now like I said, I'm buying a position of 10,000 shares, $10,000, and my target is to make $500, which is 5%, risking 1%. That's my target. Okay, so how I'm going to do it? You know, I have a target, I have the stock, I have the chart in front of me. Now I have to work, as opposed to gambling where you either pull handle or place your bets. Here you really work. So this is a mind game. Okay, now there are mind games in gambling and poker and so forth. I agree, but here it's not like you have one option to place your bet, or maybe a couple of options. Here it's like you have infinite options of stocks to choose from, and then in each stock you have infinite options to trade. Do you want to trade at 94, 94.01, 94.02, 94.03, and what is the risk? Okay, so I said we want to risk no more than 1%. So let's say on a $10,000 position, 1% is exactly $100. That's the risk that I'm willing to take. Being the platform allows me to take accurate risks, definitely intraday, assuming evil things that happen once every, I don't know, many years in DLTR. It can happen, but it won't happen, and obviously didn't happen yesterday. And let's ignore those once in a lifetime events as well. So how would I go about it? I'm looking for a trade, and let's say I'm successful with a trade, because the scenario for not being successful is I'm losing $100, and I'm placing an order. Let me post it on the chart here, to buy at 94. This is my entry here on this potential move higher, and you can see that I'm taking a risk of in this case $1. So if I'm entering at 94, my risk is going to be 93, pretty much the lows of the day. $1 on 100 shares is $100, and this is my stop loss. Let's double line it here. Okay, so this is my risk, $1. Now I enter at 94. My target is, in this case, 5%. What is 5% of 94? 10% is $9. 5% is, let's call it $4 in this case, just to round things up. So my target is 98. Obviously it's not on the chart, but that's my target somewhere up. And obviously I'm not going to reach my target in that given day. And the question is, what next? Okay, I have a target. I did not reach it. I entered the position at 94. Now it comes up to as high as 94.80, and that's definitely not my target. I need to wait. And then the stock starts moving down. It's turning a winner into a loser. Okay? And again, I'm a day trader, so I'm going to close the position at the end of the trading day, pretty much at my entry, and I ended up not making money on this trade. So entered at 94. It went up 80 cents. My target was 5%. I didn't reach the target. Was it a reasonable target? Obviously not on a day like yesterday, but that's beside the point. I just wanted to make a point here that reaching a target sometimes in day trading takes time. Okay, that's the life of the data. So in this case, the bet or the business idea, which was buying DLTR at 94, getting for a $400 profit on the business transaction, ended up not making money, but it didn't lose money. Okay, how does it compare to gambling? Has nothing to do with gambling. This is a total different type of an event where you put your money in a company, in this case DLTR, and whatever events happen over the last 2 hours of nearly between 4 hours of trading. So the business is working for 4 hours. It ends up not delivering any profits, not creating any losses. Again, how many businesses can I trade during the trading day or open during the trading day? Some traders will open 25 businesses, others will open 1. Okay, it's your own. You are the owner. This is your own business decision. Okay, just making a point here that the results can vary. Now, let's say in this case, my business target was not 5%, but it was, in this case, 0.5%. Okay, remember, I risked 1%. Can I be happy with a target of half of that? So I'm risking 1. How come my target is less than my risk? So I'm opening a business, putting a collateral of $100 and taking profits or making good of the business at half of that. Not that bright, okay? But this is obviously a scenario that can happen. Now, as a day trader, you can change your mind all along the way. So the number of scenarios that you started with, which are basically 2 scenarios. Either you lose $100 or you make $400 intraday, okay, did not materialize, okay? Now if we swing or let this position move, at one point it's either going to drop 1% or move up 4%. I don't know if it's going to take a week, a day, a couple of hours, tomorrow. Okay, those are not issues that we're going to discuss right now. The idea here is that this is an ongoing type of a business where you work, you make business decisions. Sometimes you make the right decision, sometimes you make the wrong decision. In any case, you can protect your capital if you're trading the right type of stocks, meaning liquid stocks, stocks that belong to leading indexes, stocks that have their main traders and investors are institutional investors, not retail investors or foreigners. Okay, so the owners of the LTR are not some foreign African I don't know, obscure hedge fund. No, those are American gratified institutions that put their money to work and hoping the LTR will return them profits for many, many years. And again, the LTR is not NVIDIA, and the LTR is not GME. The LTR is a legitimate company that's, I guess, doing well. But for day trading purposes, the idea yesterday to take a trade or make an investment with a 5% target and in this case a 1% risk wasn't a very thoughtful one, which is fine. Okay, day traders make a lot of mistakes intraday. Sometimes you set up a target of 5% and the stock moves 15%. We'll see it in our next chapter tomorrow, where you set a target and the stock runs above it very, very easy. Okay, that's now the summary of this video, and tomorrow we'll elaborate more on this subject. Thanks for being here with us. Please share this video with your friends, and we'll see you in the part 3 tomorrow.